Discussions in this show should not be construed as specific recommendations or investment advice. Always consult with your investment professional before making important investment decisions. Securities offered through Cambridge Investment Research, Inc., a registered broker-dealer, member FINRA SIPC. Fixed insurance is offered through various independent insurance companies. Cambridge does not offer tax or legal advice.
Welcome to the SA Update. I'm your host, Mike Schuster. Each episode, we dive into meaningful conversations and timely topics designed to empower our communities and clients. From financial insights to real-life confidence, we're here to help you stay informed, inspired, and ready for what's next. Welcome back to the SA Update. Today, my special guest is none other than Fritz Folts. He is the 3Edge Investment Management Managing Partner and the Chief Investment Strategist. Fritz, welcome to the podcast.
Thanks, Mike. Appreciate the invitation. Glad to be here with you.
Now, Fritz, I wanted to start today with our history with you, because 4 years ago, we started using 3Edge as one of our third-party money managers, and there's a nod to our Fritz Anderson, in why we're using you today, and the fact that I know Fritz and I both came up to you, and he talked about, I don't like bonds, but tell me what you do, and I guess that's how we all started together, working together, correct?
I remember meeting the both of you. I think that might have been the first Cambridge conference that 3Edge was at the time, and I still remember that, and meeting Fritz, and then we got a big laugh out of the two Fritzes, so it was fun.
Yeah, and Fritz still has a picture, of course, with you too. We got that, and we posted that at the time. So thank you. You've been a great partner. So let's talk about 3Edge. You guys have a philosophy that defense wins championships, which is great. And you've had a great year this year, Fritz, and part of that has been your overweight to gold. So I wanted to focus a little bit on that to start with today, Fritz. Talk about why you overweighted gold and what are you currently doing with gold in the portfolio?
Absolutely. So first, we are multi-asset investors, so we invest across asset classes, and we always hold at least a 4% position in gold in client portfolios, using gold ETFs to do that. And then as a tactical manager, we'll increase or decrease the gold position. And our model very early in 2025 picked up some very strong signals why it would make sense to add more gold to our portfolios. We saw the value of the US dollar was declining. The world's major central banks were buying gold, trying to swap out of US dollars and into gold. We saw, for us, something that hasn't gone away, we're still concerned about, would be the potential risk of stagflation, and gold can do quite well in that environment. We also had just the geopolitical risk and the fact that traditional alliances were in flux. And so it was a fairly powerful laundry list of reasons why we would want to be overweight gold this year. Of course, we didn't know it was going to be up the way it was, but we were very confident that that was a position we should hold, to be overweight gold this year.
So where are you at right now? Gold's had a huge run. What's the current position in the portfolio that you guys have of gold?
Sure, absolutely. Yeah, I mean, as of Friday, I think gold was up 64% year to date, which is just nuts. Right. And actually what we've done most recently, we've actually backed off a wee bit in our gold position because it's run up so far and so fast. So one of the things that we have in the model research that we do is looks at investor behavior and wants to see if we declare an asset to be, everybody be overbought, that it's just run up too far, too fast, and it's at risk of a short-term correction. So we've backed off our holdings. We're not at a minimum. We still have a material amount of gold. But for now, as we head into 2026, we've backed off from that more maximum position.
Yep. And of course, this is why we use third-party money managers, that we can take the emotion out, and you have the expertise to make this move, because you guys, in a sense, control the buying and selling, because it's easier to know when to buy, but it's harder to know when to sell sometimes. So we appreciate that, and good call on that this year. Let's go forward a little bit here. I mean, your overall portfolios did have an excellent year. What are 2 or 3 big themes we should be looking at for 2026?
Absolutely. So In many respects, at least at this point, heading into 2026, our outlook is fairly similar to what it was through most of 2025. So we want to have equity exposure. Even though we're concerned about the significant overvaluation of the equity market, the momentum behind the market was so powerful that you want that exposure to equities. But what we did during 2025, and we remain right now, is we wanted to allocate between both U.S. equities and international equities. And actually this year, so far, international equities actually outperformed U.S. So we want equities not at the minimum, but not at the maximum, and we want to divide those equities between U.S. and international. In terms of our bond holdings throughout 2025 and continuing now, we want to not dabble in longer duration or longer maturity bonds. We want to stay on the shorter end of the yield curve, and that has been also a good move in 25, and we're going to continue that into 2026. We also like tips because we feel that there's the potential for inflation expectations to rise in 2026, and we want to continue to hold real assets, commodities, and gold. So it's very similar, at least for now, heading into 26, the way we've been allocated throughout most of this year.
And of course, you're a defensive first philosophy there. So you're absolutely, that's an interesting take that you have on this coming into 26. Is there anything that keeps you up at night right now, Fritz, that that middle of the night you wake up and you're a little restless and you're wondering about?
Well, that's a very long list for me, but yeah, here are the things that we feel are risks. So first, as I mentioned earlier, I mean, the markets are so overvalued at this point, and people have talked about this. And the thing about valuation, when the market's going up, people, they don't really get concerned about valuation. They say, well, this time is different. It's okay. There are reasons why the market's going up, and that's fine. But when you get a correction in the market, and a correction that's a little more material than just a slight correction and people buy the dip and it goes back up, when you break down through that, at that point, investors start to ask, where is fair value? And when they do that, what we're concerned about is fair value is a heck of a lot lower than where we are. So that's a concern for us. I also think investors are a wee bit too complacent about the potential stickiness of inflation. I think looking out into 26, we could see the effects of the tariffs. We could see the effects of the immigration policy hold the inflation rate a bit higher. So I feel like we have the potential for higher inflation. And at some point, we could have the bursting of this AI bubble. It's just, we saw on Friday, we had earnings from some of these companies come out and people were afraid. And usually what happens is a couple of days later, everybody forgets and the market goes back up. But that's a concern. Also, there's the fact that the U.S. has lowered interest rates, looks to be going to continue to lower rates in 2026. But the Japanese, on the other hand, may be about to raise interest rates. Mm-hmm. And there is this financialization called the yen carry trade, where people borrow in yen and then invest in U.S. stocks because they can borrow more cheaply. But if the yen starts to appreciate and the dollar decline as we lower rates, that yen carry trade becomes unattractive. And so all the investors who are doing that, they're going to end up having to sell whatever equity holdings they have based on that borrowed money. So that's another concern. And then the last one is just, is there going to be an accident in the financial system? And the two areas that are of most concern, are we going to have an accident in the crypto market, in the digital currencies, or are we going to have an accident in the private credit markets? Because it's just so opaque. It's not at all clear, first of all, it's really not regulated, and it's very hard to understand exactly who has exposure and how much exposure they have. So I apologize. It's a long list.
Well,
but those are the things that our job is to protect investors, particularly from those dramatic downturns. And so that's why our list of risks tends to be quite lengthy.
Yeah, and I appreciate that being a military veteran that was in readiness training and operations, you're always looking at what could come up on you out there, or what is the alligator closest to the boat. So you mentioned crypto. That was going to be my last question for you today. Sure. Tell me what you mean, or what you're concerned with specifically about accident, or give us an example, or give the viewers an example of an accident in crypto.
Well, so, you have a lot of people who are highly levered playing in this game. You have a lot of retail investors. And so when you get, the problem that you can have is you get, as most crises or most accidents, they end up being a liquidity crisis with everybody trying to get out the door at the same time. And when you have leveraged investors and everybody tries to get out at the same time, you have a free fall in the asset class. And, what people have talked about when digital currencies came out was they talked about it in terms of the blockchain, and you can have these transactions without any middlemen. And that is a topic unto itself. For us, when we look at what crypto is currently or has been through 2025, to us, it really is showing us the level of investor enthusiasm, if you will, of animal spirits. When investors are really enthusiastic, they're buying crypto. And when they become more bearish, we see the crypto come down. So if we get a correction in the stock market, we could certainly see a correction in the digital currency market. And when I talk about fair value for equities, well, what's fair value for cryptocurrencies? That's really hard to come up with that. And so you could see these crypto markets really collapse, and that would be very difficult, particularly for retail investors.
Absolutely. So, and momentum is one of those things you just can't predict, and that's the whole thing when you have a momentum craze.
Yeah,
just like when
it can turn on a dime.
Yeah, and just like we started with gold today, there's a lot of momentum there, and absolutely a lot of momentum in crypto, and a lot of people really don't understand. Okay, Fritz, I'm going to close on this. I'm going to give you you have a podcast every Friday, A View from the Edge, correct?
Yeah.
With Steve Cuccinera. Yep. Did I say it right?
Yeah, Steve Cucciaro, who is our CEO and Chief Investment Officer, and he and I do that, and we send it out every Saturday at 8 a.m. We record it on the Friday and send it out, and it's just supposed to be choosing a topic that we think people might be interested in or concerned about or confused about, and we want to explain it as best we can, not use any jargon, which is people use way too often, as you know, in our business.
Yep.
And just help investors remain informed, because we feel like an informed investor is able to make better decisions. And that's the idea behind it.
And so that's the goal behind our podcast too, is to get out to our listeners or our clients. And one last thing I'm going to start throwing out there every week. What is one or two podcasts that you listen to every week religiously? I'm just curious.
I do listen to this podcast called Invest Well, Be Well, which is done by a fellow named Rusty Vandeman, who was at Orion for many, many years. And he actually started at Fidelity in Boston. He does a podcast called Invest Well, Be Well. And and I've been on that. It's interesting because they talk about investing, and then they talk about, well, what are the things you do personally to help you stay sharp and to learn? And I find it's really interesting to hear what other people do in our business. So that's a good one. Invest Well, Be Well. That's the first one. That's the one that comes to mind. I like that one. That's a good one.
Yeah. Well, thanks. I'm always interested to see what people are listening to. Well, Fritz, thank you for being a guest on our podcast. Thank you for being a great partner and always accessible to us and our advisors here at Schuster Anderson. If we have questions, as many of our listeners here are investing into your third-party managed fund as part of their investment philosophy. So again, for Fritz Folts, I'm Mike Schuster, and thank you for listening today.
Discussions in this show should not be construed as specific recommendations or investment advice. Always consult with your investment professional before making important investment decisions. Securities offered through Cambridge Investment Research, Inc., a registered broker-dealer, member FINRA, SIPC. Fixed insurance is offered through various independent insurance companies. Cambridge does not offer tax or legal advice.